Well, hello folks, I'm L.A. Little, and this is your weekly NeoTA Wrap. We take a look at these markets, and we do it from a neoclassical perspective, each time asking ourselves what happened last week. What does it tell us about the coming ones? We do a show every Sunday night, broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. Subscribe to it. Anytime content is pushed, you'll be notified. So it's an easy way to stay up with what's happening. As far as what's happening in these markets, let's take a look. And what we're going to find is, last week pretty much a flat, about as flat as you can get. Small percentage gains and losses. The only one that really moved is Russell. Russell is the leader on the year. That's some rotation that's taking place. It's a good sign in that people don't want to lose or leave this market. It's a bad sign in that nothing can move, and that the gains still are fairly small and even negative on the Dow for the year. Let's take a look at the indexes here. Let's pop over to the S&P 500. We'll start with the daily chart, and really you've got two overlapping ranges, right, that essentially are in effect. You kind of have this one range up here. You have this overlapping range down here. We've talked about these two ranges in the prior shows. This market is struggling. It's struggling to get higher. It's also struggling to get lower. It range traded to start the year, moved up to a higher range, and now it's down here trying to test the lows of that higher range and potentially take us all the way back into this other range again. So the market as a whole continues to struggle. It's struggling here on the S&P 500. If we look at it on the weekly chart, it's actually a little bit cleaner to look at it here. You can see these two ranges that are fairly well lined up like that we were just drawing. And the thing that I would note if I'm really looking at this market is that, as a matter of fact, let me draw in one more range, and that's this one down here. There was kind of about from there down. So the thing I would note, and I've said so elsewhere, is that the size of this range, right, the size of that range, and now the size of this last range are doing what? They're getting smaller and smaller and smaller, right, on the way up. So you get a big range, a smaller range, and even a tinier range, and they're getting more compressed as well. You're gathering, if you want to look at storm clouds, you're gathering swing point lows down here, right? That can be dangerous. You're also gathering them on a longer term time frame down here. That also can be dangerous. And so now if we draw this in and say, okay, what happens if this becomes the range? Well, if it does, right, this one then becomes the test in this area to see if we can get all the way back down here again. Now that's a ways out probably if it's going to happen, but you can see the setup starting to form that could say, hey, this market is going to chop and potentially trade lower over time. If we look at the catalysts that are out there, there's plenty of them. And you've got them positive and negative, and the positive ones, as you know, is everybody else is trading higher. If we look in Europe, if we look in Asia, it doesn't matter where you look, they're either at highs or pushing new ones. And that makes it pretty hard for any market around the world to sell off. It's no different than the general market here in the US rising and for stocks to sell off, right? A rising tide lifts all boats. Well, the tide for most of the world is rising, not falling. And that makes it hard for the U.S. markets to pull back substantially. So that's probably the biggest positive. Of course, QE and central bank intervention is the other positives that are out there. On the negative side, economics not looking that great. Neither is the earnings. And we got those earnings starting up next week. A lot of central bank chatter next week. So there's a lot happening next week that's going to have an effect on these markets, and we're going to see if they can hold this higher range or if they start to break down. Now technically there's some other things that are in effect here that are positive as well. If I pull over and look at the NASDAQ, for example, the NASDAQ has yet to even come back and do a retest regen off this prior swing point high. That's a positive. So in other words, assuming this wants to break farther to the downside, let's just make that assumption, right? Where would that take it to? Well, it would take it back in this retest regen zone. And that would be the area that you would expect buyers to try to show up. I mean, that is what that does, and that is how that trades. If I look at another strong index, it's the Russell. Now, the Russell is the only one that gained last week, and the Russell is an attempt to go back up here and test into that breakdown bar, and that would be quite a feat if the Russell were to do that. On the downside, right, the ABCD structure here on the Russell now is fairly muted. It would only bring it back into this support zone right here. So, the strongest indexes still look good. The weaker ones, and I didn't put the index in there, but the index is part of the problem. The weaker ones trying to break down, trying to set up ABCD structures to the downside to bring this thing lower and to bring it down into these support zones and potentially these other swing point lows that are down here. So mixed market, and we've known it's mixed. We've talked about it being mixed. Matter of fact, if you go back and look at some of the articles I've written, I've talked about, the market character has changed, right? And I've talked about the roller coaster, yo-yo market. That's what we're in, and that is continuing. It hasn't stopped, and it looks like it is going to continue. When we come back, we're going to look at a few sectors here and show you some pain points there, and then look over in some of the commodity markets where we're going to have a lot of movement, already having movement off those unemployment numbers, and we'll talk about those as well.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So as we come back here, I was talking about some of the sectors that are pain points. Probably the biggest one right now is the transports. The transports have been in a big range for a long time. Let's pull up the weekly. You can see this range began essentially right here around October. So, we're 6-7 months into this thing. Breaks out, it comes off those October lows like everything else, breaks out, and has been unable to make new highs ever since. Just been crawling sideways over and over and over. As we go sideways, the issue of course becomes which way is this thing going to break, because anytime you get a sideways trend, it's a consolidation. That consolidation at some point will end, and when it does, usually you'll get a larger move that's about equidistant, right, from the prior move on that break. And you can see the 2 swing point lows down here. That probably would be about the support zone. You can see that October low stretched it even farther. We may be able to redraw this into here if we get a little push down and then back up. But the whole point here is that this is setting up to try to break. And I say that because if we go back and look at the daily, there's an ABCD structure that just is coming into play now. And it's going to cleanly break out to the downside if in fact this breaks. You got 2 swing point lows over here, right? You have swing point lows on this time frame and here on the weekly. If you break, you're going to get a faster move, and it's quite a ways down to get to the next part, to the next support zone. So transports, important sector, and in trouble. Another one that's in the same boat is the industrials. If you look at the industrials, industrials have essentially the same structure. They're just not as bad off. They got swing point lows down here, and if you look at them, they also have the swing point lows on this time frame as well. So the industrials caught in some sort of a sideways range, although they made a new high in the industrials. They did not make a new high in the transports. If you look at Dow theory, that says, uh-oh, you got to be careful here. And if they both start making new lows, then that really would be something with respect to that theory. On the strong side, it continues to be consumer discretionary. You can see it still hanging way above its retest regen zone, which is way back here. So the retest here, not even close. The XLV has been having some trouble of late, doing an ABCD structure of a downside. There's enough cross currents here, in my opinion, to keep this market under wraps for some period of time still. If we go over and look at the auxiliary markets, and the reason for this is, we have unemployment numbers that came out on Friday with the markets closed. It was Good Friday. That unemployment number, about half of what was expected. Now, I don't put a lot of weight on one number in the employment. It's really about what the trend is, and the trend's still good. But that sent the markets into a tizzy. It said, hey, Fed's not going to hike rates. Therefore, dollar's going to fall. Therefore, other currencies are going to rise. That's going to send gold and commodities higher, etc., right? And that is what's going to be the big news tomorrow. And if we look at some of these markets, if you want to know what to look at tomorrow, what you want to do is you want to look at some of these ranges, that are in effect on things like the dollar and say, okay, can they break it out? If they're going to press down here and test this area again, can they break it out? Because if they can, right, then they can do another range lower. And if we take these ranges, and there's one here, there's one up underneath it, and there would be a third one down here if it does it, and that's where all the swing point lows lie. So if you can break this thing down, get back into this area, then you can try to test that bottom one more time. And that probably would be a pretty good spot to get long the dollar or get short some of the other currencies. But it does look like some of that pressure is going to be applied, and we're going to see if this thing breaks down. It should hold. If it doesn't hold, right, the range down is fairly large and allows one to take a trade off of that, whether it be here or whether it be elsewhere. For example, oil should get some sort of push just based on the commodities trying to push higher. If I look at some of the other commodities that should do well, silver. Silver traded lower, back under, over, less volume. Silver looks like it wants to try to go higher. But the one that really looked pretty good Friday or Thursday was gold. Gold was an inside day after a spike up. That was a pretty good hold. It looks to attack that swing point high and start beating into some of these resistance zones. If I look at just a continuous commodity index, that also looks like it's got an ABCD structure trying to set up to the top side. And then the opposite of the dollar, of course, is the euro, is the yen, is these overseas currencies. They look to go up and try to test those highs again on dollar weakness. So if I look at what happened Friday with the markets closed, the tell is going to be whether or not these, especially the currencies and commodities, can break. Can they break out? On the equities, I would be looking at that transport to see, can it break down? Right? Those would be clues as to what kind of pressure we either are or aren't going to see this week in front of what will be a big earnings week next week. And then, of course, this week, as I said earlier, you got a lot of talk with respect to QE and easing and just central bank policy, monetary policy. You got five central bankers either putting out meeting notes or putting out their decisions this week alone. All right, let's come back here for final thoughts here and kind of wrap this up. Because markets don't go straight up, one of the things you always have to be looking at is anytime you get some sort of a larger move, like here, and I'm looking at the monthly on the Russell. So this larger move up, not as pronounced as the move elsewhere in terms of the duration of that move up, because it went into a consolidation last year, whereas the rest of the market just kept working higher. That consolidation was essentially there, and it did that. You know, if you look closely here, this consolidation started off of this top of this bar, which was September 2013. And it really didn't get out of it until February 2015. So it took it about 15, even more than that, about 16, 17 months to get out of the consolidation. And now it's over it. Folks, that's a good thing, right? I mean, that's, you know, if you want to put some check marks out there, that's definitely a check mark, right? That's a positive, a big positive. Anytime you get that kind of a move sideways and then eventually it resolves in the direction of the overall trend, then that says, hey, this thing can continue, right? We can get a continuation of that move, and typically a large consolidation like this would be about halfway of the move. So from here to here, sideways, now same distance on the way up. That would be a huge move, right, if it were to occur. The way to trade this thing, or not so much to trade it, but to observe it so that you know what to do, is you watch very closely to see if it gets pulled back down to here inside this range again. That would be a huge negative. And it's not that far away. I mean, when we look at the numbers, that top is 1221, and we're traded Friday at 1251. So we're only 30 points. So you're roughly 3%, right? A little less than 3%. That's nothing. You can lose that in a week. So the Russell, if you're looking for strength and you're looking to see if this market's going to continue to the upside this year, the Russell right now is the market that's giving you the clues, saying yes we can. You know, from a bullish perspective, yes we can. Pulling against it, of course, is the other indexes that are struggling, in particular the listed issues. So I'm talking about the NYSE names, and lately has been the NDX. Those are certainly enough to pull this one back in, but this is a reflection of money not wanting to leave the market. If this gets pulled back in, it's not going to rotate back to the others because they're going to be weaker, which says money is starting to leave the market, and that would be a big tell. So I think from that perspective, the Russell is something you should be watching. Tomorrow you're going to see some pressure. You're going to see them come down. They're going to try to test that downside again. And if we pull this back on the Russell, and actually let's put it on the S&P, what we're going to see is that downside pressure bring us down in this bottom end of this top range. And that's going to be the question, is can you break it down or not? That's a toss-up still. It was a toss-up last week, still a toss-up. Is there enough evidence to suggest that that's the side that we're going to? I think the preponderance in evidence at this point is starting to point to the fact that this market is going to get into this lower range and probably start to expand this range to a downside. And though I'm not a classical technician anymore, I can guarantee you if we do this, you're going to start seeing people talk about head and shoulders tops. In other words, if this comes back down into this lower range down here, right, it comes back down here and can't break, which it probably won't be able to yet, and then comes back up, right, what will that look like? It will look just like a classic head and shoulders. And, you know, it doesn't have to get all the way back up to equidistant, you know, or not equidistant, but parallel to this one. But if you see any kind of a pattern, you know, where it starts doing this sort of thing, then everybody's going to jump on the bandwagon and start talking about that. So that will be the thing. And then, you know, to take this a little bit farther if you want, if that happens, and if this in fact does break, right, you come back down again, then what do you got? You got a big left shoulder, a big head, and then you can imagine what the right shoulder would end up setting up if it bounced off of here again. Folks, it could be a huge top. We never know until we get a little bit farther and we're able to read a few more tea leaves. You always have to take the preponderance of evidence that's in front of you, look at your risk profile, and decide how you want to trade it. If you're more aggressive, then you're probably already lightened up. If you're, less aggressive and you're not doing the more in and out stuff, you're probably just hanging in there waiting for some more evidence. And then, of course, if you're very conservative, you're fairly well hedged already, and you're probably not doing anything. But that's the way you have to trade these markets. It really depends on what your risk profile is, what you're trying to accomplish, and what tea leaves are being written here. And, although it's not cast in stone yet, the evidence is growing that potentially there's some problems not that far around the bend. Have yourself a great night, folks. Thanks for joining me. Tell a friend, tell two. I'm LA. This is and it was your weekly NeoTA Wrap. Have yourself a great night, and I'll see you next time. Good night.